So a lot of people have looked at this and said, look, it's only a tiny proportion of the MSCI EM index. It's symbolic, it is important, but China, in terms of dollar-denominated stocks or foreign currency-denominated stocks, is 27% of the index. At what point does China get too much?
I think it could get too much very soon, because if you calculate where it could be based on the current market capitalization, could be up to 40% of the index. Now, when you have that kind of weighting in the index, it's really a little bit too much, because you're ignoring so many other countries.
And so then is the idea as an investor to sort of be aware of that, and in as much as you're able, not to benchmark versus, I mean, does this make the MSCI Emerging Markets Index less useful as a benchmark? Oh,
no, it's still useful, because you have all these ETFs that need to have a benchmark, and it's now 26% of the weighting, which is okay. I'm just saying that over time, and by the way, this is not going to happen overnight.
Right.
It's going to take a number of years. Now, the good news is that hopefully India and these other markets, Brazil, will grow so that their weighting will begin to balance out where China is, but it remains to be seen.
You said in recent days that China still remains your top pick, and if we look around, there's still the voices concerned about some kind of debt event in China, the real estate sector. You can take your pick. Do you think investors are confused when they look at the risks in China, and actually the risks are not the sort of the restrictions that China puts on as a control economy, but actually the liberalization and calibrating that wrong?
That's right. I think a lot of people think that, you know, if they look at it through the eyes of a Western investor from the US or Europe, it looks pretty bad because the leverage in many cases is very high. But by the way, not higher than the US leverage. If you look at the US economy, it's quite leveraged as well. But the difference is that it's a planned economy. The major banks are owned by the government, so they can mitigate any big problem. Now, in the meantime, there are going to be bankruptcies, there are going to be problems along the way. And the government will allow that because they want to teach lessons to those people who have gone too far in any particular direction. But you're not going to see a big crisis. I don't see that.